Hey, property management friends. Welcome to This Week in Property Management. I'm your host, Jeremy Pound from RentScale. Now, have you been noticing that your days on market are increasing in your market? Are owners calling you and asking what you're doing to fill these vacancies? Well, today we have some ideas and some strategies on how to proactively handle these concerns. It's what we're talking about this week in PM. But while we wait for our other friends to join us live, let's take a look at a highlight from a previous episode of the show.
In Austin, it was one of those areas that exploded post-COVID and had tremendous growth. That's one of the areas that RentScale and our team go out to 2 or 3 times a year for events. It's where we're doing our annual event later this year. And it is just amazing at the growth, even when you drive through all the construction going on. You're dealing with it every single day. Tell me how the higher interest rates have slowed down, or maybe not slowed down, the investors coming into the market.
I definitely think it's impacted it a little bit, but I think as long as you know the Austin market, you know it's continuing to grow. The smart investors still see the value. So it hasn't slowed it down too much, but there's definitely some people still on the sidelines on thinking that Austin kind of the bubble popped or whatever it may have been. For the most part, it hasn't really impacted it too much.
So be sure that you're subscribed to us on YouTube, LinkedIn, Facebook, and X so that you can watch these industry episodes live, which means you can comment and be the first to hear what's new and trending. All right, so today we've got the September scoreboard to share with you. And then we have Schuyler Witt of Cedar Ridge Management with us to talk about how he is speaking with his owners about days on market. This is something that's been happening a lot. In fact, Mark Cunningham actually just sent out his email newsletter today about talking to owners about days on market, and I just dropped it into the chats and to the comments. So would love for you to take a look at that as well. And if you guys are live, please let us know what you're seeing and what you're doing as you watch this episode. This is why we take the time to go live. So our guest today, Schuyler, is in the Holly Ridge, North Carolina market. He's a client of ours, and one of our RentScale coaches, Reese, was so impressed with how he was able to proactively keep his investors and owners educated on reduced rental demand in his market. So we're going to have a great conversation that we actually pre-recorded today because he wanted to share some slides and some demos that he was giving to his owners. And he was generous enough to give you his playbook totally for free on the show on educating owners about what they should expect in today's market. So I'm excited to share that interview with you. Reese is going to join us. It's going to be fantastic. But first, we've got Jen on standby to share September's business development scoreboard with you. And I think you're going to be impressed with what our RentScale community has been putting up on the board.
Thanks, Jeremy. Hey, everyone. Back at you with another Scale Club scoreboard update, this time for the month of September 2024. As you can tell, fall is here. I'm wearing long sleeve, black colors, high neck. Hopefully everybody enjoyed the rays of the sun while they were out and everybody is ready for a cool down. With the changing season comes changing trends in real estate, and that is definitely the story that we have been telling in Scale Club and walking through many of our members with. As a reminder, Scale Club is our community of business development managers all working together to grow their property management companies in sales and lead generation. So I want to share with you what these guys did in the month of September. All right, so we've got some new leaders on the leaderboard. Very exciting, Salt Lake City, Utah at 93, first time on the leaderboard. That was a big deal that they closed. That is a mix of multifamily and single family homes. St. Charles, Missouri at 52. And while this is a very established market and established company, this is a new business development manager. Memphis, Tennessee in at 35. Longtime client of RentScale's, about 4 years now. But a new business development manager who's brought in a ton of awesome attitude that we absolutely love and a cheery, bright smile. So big congratulations to you at 35 doors. Sacramento, California at 24. She is an absolute killer, but has a great company supporting her and behind her. And then one of our leaderboard vets, Columbus, Ohio at 20. If you guys see the red arrow next to his name, he's actually down for the month of September because he signed 23 doors in the month of August. Still, I'm just giving you a bunch of crap. 20 doors is nothing to sneeze at, and we are so happy that you're here on top of this leaderboard again. But I want to see that arrow green next month. Over to the right, you will see our average number of doors added across our community is 11, which is up about 20% from the month of August. And probably the most impressive number on this scoreboard, the top performers, the top 50% of our community, are averaging 18 doors a piece right now. Woo! Yes, that is up 50%. No, that is not a data error. That is correct. I even went back and double checked it. What we're attributing this to is a release in pent-up demand. We did see slower months in July and August than we had expected. We think that a lot of the continuous nurture that these BDMs have been doing really released that for September. So that is what's reflecting that 18 doors on average for our top performers. Lead volume is up at 27 on average. That is 25% higher than last month. So as you can see, there are some big numbers on the September scoreboard, and I expect that to continue into October. Overall, our community was at 104% of goal. So what that means is that our BDMs are outpacing their forecasts at this point, which is a fantastic thing for any owner to hear. Some big trends that we saw this month in Scale Club where we saw a big rise of accidental landlords. I'm sure you guys are not surprised by that. So we're talking about that. We're talking about how to handle those accidental landlords and how to even change them to intentional investors and how to carry them through that sales process and nurture them properly. We're also talking about how to capture those. I actually just got off of a practice where we spent a significant amount of time working on our outbound scripts for furbos. So excited to continue that in our community and excited to make sure we're leveraging these trends. We know that differentiation is more important than ever. And I think we're having to differentiate our companies on everything from price to services and to how we treat our tenants. You guys are seeing it across the industry, and all the best property management companies are trying to figure out how to make their services stand out above or outside of the rest. So more to come on that, but that's a huge theme in our community right now. If you want to learn more, we're going to be talking about this in detail at Sales Mastery. In fact, there's an entire session around lead generation and how we use the messaging and lead generation to highlight the differences and how we're actually going to make investors' lives better. So if you don't have your ticket, you can go to salesmastery.live and you can get signed up for that. And if you'd like to look back at the scoreboards, you can go to rentscale.com/scoreboard and you can see the historical data for looking back just over a year now. That's it. Back to you, Jeremy.
This episode is brought to you by Strategic PM, the magazine for property management entrepreneurs and executives. If you go online to strategicpm.com today, you're going to find an entire website full of content written about your industry and by your peers. And it's completely free to sign up. Just go ahead and click on the create a free account right in the upper right-hand corner. When you click on that, not only can you create a digital account, but you can actually add your mailing address and we will send you a free 1-year subscription of the print magazine, which will be showing up in your offices every single quarter. So if you take a look inside the magazine, what you're going to see is that we are focused on growth. We've got 5 pillars of Strategic PM: vision, strategy, culture, marketing, and experience. You're going to be seeing some great high-class content from some of the best thought leaders in the industry talking about the matters that matter the most to your business. So sign up for free today at strategicpm.com and look for the magazine in your office.
Welcome back, everybody. On This Week in PM, I'm here with Jeremy, and I've got Schuyler, one of our special guests here. I've been working with Schuyler for about a year and a half now through a couple of BDMs. There's also just some one-on-one time with Schuyler about the business in general and some growth opportunities. So wanted to bring him on today because one of the things that we're experiencing across the country is longer days on market in the rental space. So Schuyler, I appreciate you coming on today. I'm going to pick your brain a little bit, talk about what you're doing, because I know you've had some creative solutions that have come about through, I wouldn't even say an obstacle. It's just one of those waves in real estate that we're trying to move through. So first of all, let's talk about where your business is and what you're experiencing. So what have you seen in North Carolina in regards to days on market, and what did that look like before to what it looks like now?
Yeah. So currently in Eastern North Carolina, days on market is just drastically longer than, I would say, the relative experience that investors currently have. And I use those words, relative experience that investors currently have, because it's extremely important. And actually, their experience is extending days on market. So since the crash in 2008, it started climbing, in 2011 and kind of recovering. We've just been going up. And I mean, as well as I do, there hasn't been enough supply in the housing market. That continued for a long time. Then COVID happened and we print a lot of money, and it depends on what state you're in, but we're in a very landlord friendly state here in North Carolina, and we have a lot of migration coming into the state. So that increased demand big time, and our supply was choked. So we just had rents went crazy for us in 2021 and 2022, which was experienced in a lot of places, right? That's what inflation kind of does. But I'll just give you an example. Last year, Section 8 and HUD changed. They did a market analysis, and they moved 3-bedroom rents up to $1,795. A 3-bedroom house in Onslow County, in this county I'm talking about, the average rents is $1,588 right now.
Wow. So really reacting to it.
Yeah, so they were reacting like crazy, and that was just happening everywhere. So our days on market is up for a lot of reasons, and we can talk more about why. But one of those reasons is investors want more money. And when they get involved in the leasing process and they say, that's great, Schuyler, but I actually want $2,600 for the thing, and I know it's going to rent for $2,195. We have a $405 difference or $505 difference that they have to experience the pain of it not renting until they're okay with getting it down to $2,195.
Yeah.
And that takes time. So I could talk a lot more about this, but you probably got some questions to kind of guide it instead of me just talking.
You're all good. You're all good. I can sense the passion, which is awesome. Yeah. So let's talk about coming out of COVID, because I was actually in the BDM role, leading a property management company right outside of COVID, and there was a period, and we jokingly talk about it now, where we were just picking numbers out of the sky, what we wanted to put properties out there for rent. Like there was no rhyme or reason. Like even on renewals, we were just shooting for crazy high numbers, and we're getting those. I mean, there was a point where we put a property out on the market. We had 10, 20 applications within 24, 48 hours. Obviously that dynamic has changed. So we've seen, the 7 to 14 days on market. Here in the past 6 months to 12 months, we've started to see it stabilize. And I think now we're seeing it on the decline a little bit. So in your specific market, what are you seeing as an average typical days on market, even if it's priced right now?
If it's priced right, 24 days is our average days on market.
Okay.
If it's not priced right, average days on market is 63.
Interesting. So, and that I'm sure includes multiple price adjustments going through that process, right? Mm-hmm. So let me ask you this, because I know you're doing a lot of things internally, working on the communication with the owners, making sure you're setting those expectations. Let's just talk about your current owners, not new owners that are coming into your portfolio. What are you doing as far as communicating to owners that maybe have had the same tenant for the last 5 years or so, or even 3 years, where they got peak of the market? and they're expecting high rental amounts as those properties become vacant. How are you communicating what the market's doing now to those owners?
So right now, if I've had the owner for the last 5 years, my message hasn't really changed a lot from the last, I don't know, 3 quarters, really all year. Since I'd say starting Q3 last year, this is when this messaging went into effect. I do a quarterly call with all of my clients. So not one individual, but one big call that I invite everybody to. And I have 4 things that I do at that call. I bring in a sales professional to talk about the macro sales environment and then the local sales environment. I talk about the national rental environment and the local rental environment. And then I have a lender come on and he talks about finance. And then I bring on a guest speaker to talk about something relating to the investor. So I've been talking about this market now for over a year and how we're entering this. So my clients, if they're paying attention, it's kind of like the same song they've been hearing for a while. I recently did a call to help my team out with some of those clients that have been onboarded, I would say, in the last 6 months. Our biggest problem is clients that kind of came on from, this spring, so April timeframe to now, that as well as I do, when you're selling something and talking to somebody that they hear maybe 50% of what you're saying. So I've needed tools to reinforce what I've been saying for my team to use with people, to give consistent messages out, and just what we've been talking about, how rents have been stagnant or declining. And yeah, I'm kind of meandering now. I forgot your initial question, to be 100% honest.
Jump in, Schuyler, because I understand why you'd want to have those calls, and what's in it for you in terms of educating them, managing expectations, which is huge. But like you said, people won't. The one thing I did hear you say is people only hear 50%. So I don't know what I missed, but that was the 50% I did hear. But I do know, as with my marketing hat on, I know why you would want to have these calls. You're mitigating damage. You're being proactive. You're staying out front. What does it look like to your audience? How are you packaging the calls? What's in it for them? Why are you saying you should come to these calls? And then how are you following up? Walk us through how you're marketing it, because this was something that I think that, Reese saw, that you're getting people to come to these calls and they're listening to you. And we shouldn't take that for granted, because nobody wants to show up to be lectured to. We can go to church on Sunday for that. You got to package it in the right way to get people there. You got to make sure they hear it. So kind of walk us through why people are coming and how you're communicating to them.
Yeah. So I only market it to my clients. I just send emails out, and 2 weeks before I'll say, hey, this call's happening here. This is what we're talking about. This is who our guest speaker is. A week out, another email. 3 days out, email. Day of, text. But I think why people come starts when they join my company and become a client, because my message that I'm putting out there is that I'm 5 to 8 years ahead of you as an investor. And I don't say that directly, but our tagline is engage management by investors for investors. And on our about page, it talks about my investment history, which isn't yet like Brandon Turner inspiring, but it's relatable to the guy that's trying to build a portfolio of 10, 20 properties. And that relatable part, I think, is really important, because when my BDM walks alongside of them, it's not, this is how to manage a property. It's, this is what we've learned since investing since 2011. Oh, by the way, this is how to manage a property, because that's how we've learned how to win in investing. And when you're really educating somebody like that, and they're kind of joining that aura, they want to be a part of what you're doing, and they want to learn. And there's an attitude of humility in what we do, because I freely admit that I don't know everything, and kind of use that as a sales thing to set up for problems that are happening in the future. But people want to be a part of that, and I think that's why they come to our call.
And I would also just kind of poke at that just a little bit. You're also setting yourself up to have a longer lifetime value of the account for that one property. But also, as you continue educating, you're giving your owners more confidence to continue their real estate investing journey versus just having that one property. This is how we manage it. You're taking a very proactive approach to it from the day that they get onboarded, communicating all of these steps and what you're seeing so that they feel confident moving forward. Does that sound pretty accurate as part of the plan?
Oh yeah, for sure. It's 100% part of the plan. And I would say so I don't do any marketing. And for people watching this, I started in spring of 21 with 7 properties under management. And now we have 211, and we're continuing to grow at that rate. I'd like to accelerate it. Yeah, you talk about lifetime value of a customer. My goal for 2025 is to start marketing to people before they're investors. And I'm going to build a consulting coaching video series that breaks down every single step of the investing process. And I'm going to sell it on my website. So people looking for investment advice are going to find that. And I'm going to sell it to them. I haven't figured out my pricing yet. But one of the things it's going to do for me is if I'm nurturing them through that journey, once they are a client of mine, they're never leaving.
Yeah.
Ever.
Yeah.
Like, I'm not a commodity. I'm your friend. I'm your coach. I'm your mentor. And you're not leaving that guy. And then if I get you to 20 properties, now let's walk through a 1031. Let's buy an apartment together that I'm going to manage. So I have this person literally for their entire investment lifetime.
Yeah.
Well, let me ask the question, Reese, that I think everybody watching right now is going to ask, is he's like, I don't do any marketing. Meanwhile, everybody that's hiring him, you seem like you have all this great authority, Schuyler, which is amazing. Because I was about to say, oh, you must be marketing this really well for people to show up and want to listen to your journey. So how would you, speak to the listener that's saying, oh, you've grown, from 11 properties to 200 plus. When you say I'm not doing any marketing, you got to be doing something. People are showing up. Unless you've got one sneaky investor who's gone from 12 doors to 211. If so, it's going to discredit everything you're going to tell us. So why are people continuing to do business with you, or bringing new business to you, I should say?
Yeah. I mean, from the beginning, we just decided to give kick-ass service and started a investor meetup. Well, a friend of mine started an investor meetup with me. I say he started it. I went, and as he built his sales business, I built this management company. So I've got a lot of referrals from him. I mean, we just really do a good job, and we ask people for referrals, and that's really as simple as it gets. And I think if you have a kick-ass product, and in this space, you have to be inspiring, I think. I just did a call today. My BDM quit last week, so I'm jumping back in the sales seat. Met the guy. On Friday, he was a website lead. Don't do any marketing. He was a website lead. He just wanted us to lease his property for him. Just good needs analysis. Tell him that's not what he needs. Sign him up, and we'll have his property listed tomorrow because of what he needs going on. And I think just by doing great things like that, he's now a sales rep. He's a marketing mouthpiece for me.
Yep.
I've averaged 7.33 properties per month this year. My closing ratio is 50%, and the ones that haven't closed are going to close when their time is up, right? It's when they move, when this thing happens, I'm getting their property.
So Jeremy, don't virtually punch me on this, but that's just creating brand ambassadors, right? That's like creating people that are going to go out and sell for you, because you're putting your clients first, right? Their experience from day one all the way through. And one thing I don't want us to miss talking about, because I kind of gave you this idea and then you took it and executed it. It was one of the things with the longer days on market. How do we combat those? We got owners that maybe don't want to reduce the price, but then there's some conditions where maybe it's priced right, but it's still sitting out there a little bit longer. So one of the ideas I threw out there that I had done previously was like, hey, the owners aren't the only one that need to cut their costs to actually get the property rented. So I actually looked at your website and I saw this, where you're actually doing some incentives on the property management side to get people to lease these homes out faster, which in turn, your owner is going to appreciate that. Also, they're going to stay with you longer, kind of reduce some of those frustrations. So do you want to talk about a little bit like what you're doing? I would say taking a hit, taking a little bit of sacrifice on your side, but for the greater good of the client. What are you doing for those properties that are sitting out there for a while?
I don't think we market waiving application fees until something gets really hard, but we use it deliberately with tenant leads to help reel them in and close the deal. Because right now, if you're a renter, especially this summer, it's less right now, but it's still happening. You know, it's like going to Blockbuster back when there were Blockbusters and not knowing what you wanted to watch. You spend a half hour looking at movies.
Wait, what's Blockbuster?
Yeah, I was asking question. I was like, the audience needs to know this question.
You know, so Netflix now, you don't know what you want to watch, and you open Netflix, you're going to look for 25 minutes before you pick something.
How many times do we go to bed because we can't find it? Like we spend 25 minutes and we're like, you know what, we're done. Let's just go to bed. Not even watch.
That's what it's like being a renter right now. Like, I don't need to move I don't need to move for 90 days. I'm just looking. There's so much stuff out there. Oh my gosh, I need to move in 30 days. No rush. There's so much stuff out there. Just looking, just clicking. So what we are doing, if you have any kind of good leasing software, is you should be capturing some leads that aren't turning into showings, because people are just clicking and looking. And, they might fill out 10 different forms to look at 10 different properties with 10 different management companies. If that happens, talk to your owners about minimizing vacancy and looking at vacancy as an expense on your P&L, and then say, okay, to minimize this, I got this list of people. Let's do a move-in incentive that we can email out to everybody that's clicked on your property to help gain some interest. So that's another thing that we're doing.
And it's proactive, right? You're managing the relationship with the owner versus them having to ask you to do something. You're driving the success for them. So if I'm hiring a property manager and they're taking this proactive approach, I'm getting quarterly calls with the owner of the company, getting macro, micro updates. We've got guest speaker. All of that kind of encapsulates an owner experience. And in our world, in the property management space, like that's what owners are demanding now. It's not just the same old, I signed up for property management service. They're going to collect rent, do the maintenance, and simplifying it. You're taking things to another level. And I can't imagine what you have planned for in the future. If you're at 211 doors and you're doing all of these things at a very high level, what that's going to look like. But I think ultimately what you're doing is being a champion for the owner. You're not necessarily waiving application fees. They're getting a credit, as part of their move-in funds, but that differentiates the property from all of the other ones that are out there in the market. So it's just taking those proactive steps. And right now, that's our curveball, is longer days on market. But next year, it could be something totally different. And if you're thinking ahead and communicating with your owners, that's something that's going to tee you up for long-term success as well as them.
Thanks. We also have a lower than average application fee.
So Schuyler, we talked about like conditions, but the most important factor is how are you getting all of that information to your owners in a proactive way? So what specifically are you doing to translate all that information to your owners?
Yeah, great question. So I do a quarterly owner call that we talked about, but my team actually asked for more help because all of our clients don't go to that call and everybody doesn't look at their email. So when they have a specific conversation with somebody and they get this light that goes like ding, 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 I need to share this piece of information with Schuyler, they send a video that I made to that person to help reinforce what's being said. And as you know, nobody's a prophet in their own land. So if the CEO of the company says this, there's more authority that comes with it. So I'll share that presentation. All right. So did this video. And this is kind of the slideshow that I went through. This was my agenda. So I give advice from real credible people, Warren Buffett. I talk about the real estate cycle. I would bet my rent roll this month that 98% of your clients out there, if you're a property manager, don't know what the 4 stages of the real estate cycle are and how to define them. So talk about that. Education is power, right? And it puts you in a seat to know more. So if I ask you questions that I'm educating you, you know I know more than you. You're not going to question me as much when something like days on market gets extended. So talk about where we are, rental trends, and then how to minimize vacancy and maximize your ROI. And then I went through, I think, 8 case studies of current properties that actually I own to talk about where the real returns come from in investing. So I'll just fly through this real quick because this was about I think like a 12-minute presentation that I gave. But Warren Buffett, right? Nobody can refute what he does. And then big things, just talking about the real estate cycles, right? So there's 4 phases, and highlighting in your area, in my area, multifamily is in phase 3 right now. I got like 8 mega apartment complexes coming on board in my management space. Single family homes is probably right about here somewhere. It's hard to know specifically, but you can tell from the like supply demand curve, you know, what kind of things are. So I talked about where we've been. Everyone's recent experience is phase 1 and phase 2. Things have just gone up since 2011, just up. So when things start going down, people freak out. And because things have been going up, their expectation is to get more money, and then they fight with their property manager, and it just takes longer to rent things because you're having all this owner conversation about, no, we can't get it for $2,600. It's $2,195. So after talking about like the sky is falling, you need to reassure your clients that the sky really isn't falling that bad, right? So then I zoomed out and said, okay, let's look at the historical housing data. And literally rents don't go down if you're looking at any like 10-year period. In 1950, rents were $602. Like literally 1940, $13, 1950, 30, 55. This is current rent in our fair market dollars. So I brought it back then to Warren Buffett: buy a wonderful property at a fair price and hold it forever, and you're going to win. But
You mean
that
patient?
What's that?
You mean patience?
Yeah, patience. So talk nationally a little bit, kind of where we are right now, to let people know it's not just this immediate market, or it's not just how I'm managing your property. This is just what's happening in the United States. Locally, brought it back about what's actually happening, and I talked more specifically about like supply and demand in this area. But then this is really cool. This is what my property managers really wanted me to hit home. I used the MLS to pull all of the leased properties for a period of time. I think this was for all of Q3. And I found that if a price drop was required, the average days on market was 63. So, Mr. Owner, when would a price drop be required? It would be when you want to rent your thing for $2,600 and I tell you the actual rent is $2,195, and we drop it 3-4 times till we get there. Where if we don't drop it, I'm going to list it, I'm going to be at least in 24 days, probably less, if we do this from the get-go. And then what does that mean to you? Well, if my average lease is $1,790 and we lease it for $1,790, but we go 63 days vacant, you're losing $3,759. But if you listen to me, you're only losing $1,432. So by doing things improperly, even at the lower rent price that you're not comfortable with, I'm saving you $2,000. Wouldn't you like to save $2,000? This is the data that shows you why we need to list it at X price.
This is great. And I just want to jump in. You're bringing in not just hypothetical numbers, but you said you're bringing them data from MLS or from someplace.
From the MLS. From the MLS closed 3-bedroom, 2 houses in the counties that I manage in.
And so if it's October and my lease is ending in January and I get on this quarterly call with you, you're prepping me basically, is what I'm taking away. Like I'm seeing that, oh, okay, well, you know what? I need to be ready to listen to Schuyler. And whatever he says, like I need to run this calculator, and I'm expecting to see something like this with my account manager, my property manager, whoever it is, and I'm expecting to go through this, and then now I'm in control as the owner, and I say, okay, listen, I'm just not comfortable. I don't want to drop. It's been renting for $2,000 for 3 years, and now you're telling me I got to drop it to $1,850. I don't know if I want to do that. But what does it look like at $1,950? And like now with education, I'm a buyer and I'm making decisions, and you're not selling me, which is what I'm kind of taking away from this. When you get out there and you're sharing this with your prospects before they have to make this conversation, you've seeded the intel, you've seeded the algorithm in my head, and now I show up as an educated decision maker, speaking the same language you're speaking or your property managers are speaking. And now we're having a conversation and we're speaking the same language instead of me speaking, English and you speaking Spanish. Like we're talking the same language. That's what I'm taking away from this is you're seeding the language that you're then going to use to persuade them or influence them, really consult them, like to help them make a good decision. That's what I'm saying.
Yeah. Well, I would say over consult the owner to help the owner make a good decision. I would say give the owner confidence that they just need to say yes. Like they don't even need to make a decision. My goal is mailbox money for all my clients.
Yeah.
I want them to have so much confidence that when they get an email from anybody on my staff, their response is yes, let's do it.
Wonderful.
That is my goal.
Wonderful. All right. So we can't go through the whole presentation, although
Cool.
I'd love to, but I don't want you to give it all away. So give us the highlights, because I don't want all your competitors stealing all this information from you.
Yeah. I just walked through 5 properties because people are all like, oh, I can't make money in this market. So I went through various years, right? 2022, and looked at a real return. Bought something in 2011, real return. 2016, real return. 2023, oh my gosh, you can't make money into 2023. Interest rates are crazy. This was an on-market MLS deal. But you just got to know what you're doing, and that is the biggest thing. Bought this in 2023. That is something that most investors aren't professional. Most of your clients, if you're a property manager walking this, aren't professionals. They're an accidental landlord. They listen to a couple Bigger Pockets podcasts when they first became a professional in like 2014, and they thought it was cool, and they made money prior to 2021 buying 1 or 2 houses because everybody made money when you bought houses in 2020. And now their skill sets are lacking big time, and they're scared and they're fearful. And our job, if we want to grow, is to educate them, to help them be professional, minimize our customer acquisition costs, because I already have that person, help them believe in a dream of, wow, I really can retire if I get X properties. How many of your clients know what an investing strategy is or have one? And then I showed, so I did everything here. And I know you said don't tell everybody everything, but execution is really hard. So I don't really care if people hear this.
I say the same thing. I actually love that.
What I was pointing out was that the majority of all of these returns came from appreciation, right? So I'm cash flowing in all of them, $3,000 there, but my appreciation return is $8,000. $6,000 here, but my appreciation return is $100,000. Cash flow $10,000, appreciation $100,000. Cash flow $6,000, appreciation $7,000. Cash flow, this one's actually negatively cash flowing. Appreciation $57,000. So what that means, if we have to take a loss this year from a cash flow standpoint, I just showed them that 80% of their returns are coming from appreciation. So let's take care of the asset and let the market take care of itself. Let's let the government print money. Let's just buy things of real value and win. is the takeaway from that. Sorry if it's too long.
No, it's great. You can stop
I
sharing.
love the passion.
First of all, I'm very offended that you've questioned my university education from YouTube on Bigger Pockets, but I will let that slide. So I think there's a big debate here. I don't want to get too into the weeds because we're, pretty far into this, but I do think that there's a lot of people out there that say you should never bet on appreciation. It's always cash flow, right? One rental at a time is another YouTube education that I have that you questioned. And that's all they talk about. Never bet on appreciation. I don't necessarily agree with that. I want to share my position. So just briefly, as an investor, I think personally, and as a consultant who's basically educating people, what are your thoughts on appreciation? Are you bullish on this going forward?
Yeah, I love this conversation. I also think you should never bet on appreciation. If you can't float the thing, if the cash flow can't float the thing, I personally would not invest in it. But that's not to say our current monetary policy, since we got rid of the gold standard, is to print money. And I personally, so this is like I said, this is a much larger conversation than we have time for right now. I know I just showed a lot of returns coming from appreciation, and that is true. And that will continue to happen as long as we print money, because we say appreciation mostly because people don't understand what's happening monetarily, right? It's actually the value of the dollar going down. So you can bet on that. You might not be able to bet on appreciation, but you can bet on the dollar being devalued. And as the dollar is devalued because it's fake, things of real value are going to increase in the number of dollars it takes to buy them.
Agreed. Yeah. Thank you for being so succinct on that, because I realized when I asked that question, Scott, I was like, oh, this could be another hour podcast. We'd love to have you back, have a panel about this. I love everything you just said. I will just add that in addition to the strong argument about printing dollars, there's also this thing called supply and demand. And I think we are, there's this crude analogy of like people going to New York City and just realizing like every prom queen from every Midwestern city is just on a bus to New York City. And so you have this like oversupply of these beautiful women in New York City. I feel like that's the US right now. I feel like the whole world is sending their brightest and their best to the United States. So I also think appreciation is a bet on who is going to outdo the US. Like everybody is sending their biggest and their brightest here. We're way underbuilt. We have amazing immigration in both a bad way, take the political side out, but take in the good way. I mean, we've been accepting the best and the brightest from the world for decades. And I think that's going to keep happening. And I think that you're going to look around in 5-10 years and the US is going to be the place you want to be. And we're going to be underbuilt and we're going to keep, having supply. And so I think that's a different argument for appreciation that maybe we'll talk about on a future call. Yeah. I think that's really big. I think it's amazing. Reese, is there anything that we didn't ask because, you teed us up for this? I want to make sure we did. Is there anything else we want to cover?
No, I think that was good. And I just really love that, Schuyler, you're highlighting how the owner experience starts from day one so that you're teaching them how to be a better investor, how to manage expectations before the conversation even comes around. So you're becoming a trusted advisor, and that's going to keep people with you longer. It's going to give them confidence to buy future properties, which grows your business. But also the biggest thing is if I was an owner and, had my property with you, I would go tell every other person I knew that had rental properties about you, because it'd be like, hey, well, I just got off my owner call with my property management company, and they're going to then echo what you've taught them. So you're going to attract more people to your business. So I love it. And I appreciate you being an open book and sharing, and love to work with you, and can't wait for 2025.
Yeah. Thanks. Thanks for all your help.
Schuyler Witt is a former Marine. Thank you for your service, Schuyler, who founded Cedar Ridge Management with his wife, Avery, in 2021. He's been a real estate investor since 2011, and they currently manage over 200 properties in the Holly Ridge area of North Carolina. His beautiful and brilliant wife keeps him sharp, and he loves spending time together with his, oh my gosh, I hope I don't mingle this, his wonderful boys, Benaya and Ringel. Did I get that right?
Uh-huh.
Oh my gosh.
Right.
Goodness. Wonderful spellings. Love those names, actually. Any parting words, Schuyler?
If you're a property management entrepreneur and you haven't figured out how to take long vacations, you're doing something wrong.
Appreciate that. I would just remove property management entrepreneur and say, if you're an entrepreneur and you can't find a way to take long vacations, you're doing something wrong. So
Yeah.
I really appreciate you. Can't wait to have you back on soon.
Yeah, likewise. Thanks, Jeremy. Thanks, Reese.
Thanks, Reese.
Hi there. Did you know that RentScale hosts one of the largest communities of property management sales professionals in North America? Well, my name is Reese Register, and I'm actually a previous BDM and currently a scale coach here at RentScale. We provide over 20 hours monthly of teaching and training and accountability to make sure that our BDMs are supercharging their sales business through inbound, outbound, and allbound. So if you're interested in learning more about supercharging your business, go over to rentscale.com. We'll be glad to schedule a consult and see how we can help you transform your business today.
Welcome back. Let's jump into the calendar and wrap this up. Fantastic job, Reese, as always. And it's so great for Schuyler to share so much. I mean, obviously, you guys know these concepts are in your head, but to put them together in the slideshow like that and to be able to articulate them is tough work. And so really appreciate Schuyler showing up and sharing all of that. Let's jump into the event calendar. I'm packing. Suitcase is half packed. I'm heading to NARPM next week. We have the NARPM National Convention and Trade Show in Dallas, Texas. Hope to see you guys there. By the way, just a little side note, I'm actually going over to Indianapolis for the weekend. You guys know I'm a huge Dolphins fan, and got a little guys trip planned with some friends, and we're going to watch the Dolphins take on the Colts, and then I'm heading over. So Monday to Friday, I will be in Dallas with you guys. We have a little secret party. If you're a client or a big fan, reach out to me. We're getting together with some of the great people from Second Nature and some other friends of ours. And we're having a really cool event that has not been publicized, not been published. I'd love to see you there Thursday night. But if you're at NARPM National, come by. Jen, myself, and Box from our sales team is going to be there. And come up and actually, maybe I'll be wearing this shirt and this jacket, and you can actually see the person, see the person in person, as they say. And come and talk to us at the trade show. Can't wait to see you guys there. It's going to be a great event from everything that I'm seeing. Then got a little bit of a respite. Not a lot of events in November, but December, it gets busy again. Got two amazing events. So we've got Lead Simple University in Austin, Texas from December 3rd to 5th. As you guys know, if you've been there, this is an amazing event. They're going to tell you all the things you need to know about how you can be using Lead Simple that you're probably not, how to get all the money that you're paying for Lead Simple out times 100. And what I really loved about last year's event, all the things that are coming from Lead Simple. So we'd love to see you there. In December, the first week of December in Austin is a big week because after Tuesday through Thursday, when you go to Lead Simple University, we have another amazing event, and that is our RentScale Sales Mastery. So Jen mentioned this in the scoreboard video today. You got to see it. We have spent the entire year getting ready for this. This is a one-day event. So this is the Friday on December 6th, right after Lead Simple University. We're about 3 blocks away, so you can bring the team, and not everybody needs to go to both events. You guys can all hang out in beautiful weather and a beautiful time in Texas, or you guys can go to both events. But on the Friday, we are having RentScale Sales Mastery, and this is going to be our biggest one ever. Last year, we sold out at, I think, 75 members. This year, we've got room for about 100 companies. We're capping it at 100 companies, which we're really excited about. We're actually in a much larger venue where Lead Simple University was last year. And we've spent the entire year working on this event, and there's still tickets. And the only place to get a bundled Lead Simple University and Sales Mastery ticket is actually our website, which is salesmastery.live. Yes, you can actually get a .live domain. So if you go to www.salesmastery.live, you can register for just Sales Mastery, or you can register for a bundled ticket for both events, which I'd highly encourage you guys to do because I think both events are going to be amazing. And when you think about the sponsors that both of these events have, I'm just saying, like Austin is going to be the place to be that week in. If you're in property manager, if you're in property management, you are going to basically be immersed and surrounded by all of these great people talking about property management, talking about a great 2025. And that's really the plan that we have for you. So if you haven't booked your ticket yet, you haven't thought about this, I'd highly encourage it. I think that these two events combined and paired together are just going to blow your mind. And I just, hope to buy you a drink somewhere or hang out with you. And I think it will be amazing. So that will wrap us up for 2024. We're already looking ahead at 2025. Can you believe it? Jen and I are also speaking in Las Vegas at the Systems Conference on January 20th to 23rd. We are having the PM Systems Conference, which I have never been to before, but I've heard nothing but great things. This seems to be everybody's favorite conference that just popped up. I don't want to say that because I've just sold you on Sales Master, and I think that should be everybody's favorite conference, but I realize it may not be yet because you haven't been. But I've heard nothing but amazing things about what Paul has done in Las Vegas at the PM Systems Conference. So we're going to be talking about how to grow your company in 2025. We're going to have very different content than we give at Sales Mastery. So if you are really serious about growing your company and masterminding, I would suggest that you actually think about signing up for both. And that's the event calendar. If you have an event you need to know, please comment below. Please let us know what you're doing. We'd love to hear about it. We'd love to see you at those events, shake hands with you, hang out, break some bread, buy you a drink, all the things that we like to do. But that's it for this week in PM. Thanks for joining us and learning about the latest tips and trends from the top residential property managers in North America, like Schuyler. Please be sure to join us every time. We do this every other Thursday so that you don't miss out on your competitive advantage. Check out all the latest going on in property management and get details and show notes about today's show and guest. Just head over to strategicpm.com. Please email our team at biz@rentscale.com. That's biz@rentscale.com if you want to get in touch with us. We'll see you next time. And we'll give you the next latest update on property management. And that is what's happening this week in PM.